What is going on, everyone? So in today's video, guys, what I want to do is I want to update my analysis on Alibaba. This is the second video. I'll have a link come up right here, and basically that's my first video I made analyzing Alibaba. This stock has seen a lot of movement and a lot of swing in price since I've made that video, so I felt a lot of the questions I'm seeing and hearing from people right now have gotten me really, I think I need to update and make a Alibaba video. Try to give everybody a better way to trade this stock, okay? So I've pulled up, this is not even updated right here, but this is in 2017. It's market caps across the world, okay? And so the first thing I want to talk about, guys, is just how dominant the United States is and really how dominant China is. And you can see here, according to this graph right here, you know, China is not even close as wealthy as the United States. And so their market, the Chinese market, is seeing a decline right now. Now, here's the one problem with Alibaba I'm very aware of. It's not necessarily a problem, it's just you have to change the way you think about it, is that it is a Chinese company that is traded in the American markets, okay? So what it does, it tends to do is it trends with Chinese companies, but they doesn't necessarily trend with American, like the big tech companies in America. It doesn't run side by side with Amazon and Google, Netflix and Facebook and Apple and all those type of companies, you know. Alibaba will stay it will trend very, very similar to the movement in the Chinese market, okay? And so a lot of this is, a lot of the reason the Chinese market has declined so much recently, they're actually at a one-year low. You know, they are seeing their economy dissolve just a little bit, but it's really the trade wars that they're having with the United States. You know, United States is capitalizing on that, and China is, you know, they're getting very financially beat down because of the trade war. And I definitely think they'll overcome this. I think this is a short-term thing. But what it's done is it's just made the Chinese economy pull back a little bit for right now. So I want to emphasize the importance of, if you're going to trade Alibaba, is to also be tracking an index, the stock market running in China. Let's go to the biggest one, and I'm going to pull up a chart, kind of illustrate to you what's going on with the Chinese market and Alibaba. All right, so what I have pulled up, guys, is the Hang Seng index, ticker symbol HSI. So I got it right up here at the top of the screen in case you want to go. I would definitely put this index into your portfolio and put it into your daily watch list, and here's why. Alibaba is going to run closer to this Chinese index than any index we have in the, you know, we use in the States. And this Hang Seng index, guys, is very similar, very comparable to like the Dow Jones Industrial Average that we use in the States. So you know, it's a large representation of the Chinese market. You know, the best companies, you know, it's an index used to track the best companies in the Chinese market. So right here kind of tells the story, the one-year story of Hang Seng, okay? So this index has got up as high as 32,000 points, almost 33,000 points at one time. And over the past year, it's been beaten down over and over and over, and now it's seeing a relative downtrend, and it's hit a one-year low. So not only has this index seen a one-year low, but you know, most of the big players in the Chinese market have also seen they're trading at a one-year low. I'll pull up Alibaba and show you that. So as you can see, now I've got Alibaba pulled up, guys, and as you can see, it's not exactly the same chart pattern, but it is also, you know, it's hit highs here and there, but it is actually Alibaba is trading at almost a one-year low right now. So when they hit 167 bucks, 166 bucks, 165, I know a lot of people have bought in. I upgraded my position a little bit with Alibaba. But another thing too, Alibaba is a, you know, globally used company. It's not just it's, you know, you're not going to get the exact same number or the exact same figure that you would from, you know, looking at the Hang Seng index. But Alibaba itself does represent China's economy very broadly. So, you know, Hang Seng has hit a you know, 1-year low, and so has Alibaba nearly at the same time. Now they got earnings report this week. They report earnings on Thursday. But you know, too, at the same time, if there's not a lot of catalysts to lift the Chinese market back up, it might stay down for a while, and Alibaba might stay down for a little while. These stocks, you know, the big Chinese players, I would not look to get into this position and look to make a rapid return. You know, but for long term, Alibaba is a screaming buy at 172. You know, and I even think that we can go up on our price target a little bit, because Alibaba is the kind of company that will invest money into a recession or into a big market pullback. So they're one of the few companies, but what they'll do, guys, they'll invest all this money into smaller companies and ideas, and they'll try to up their cloud computing. They're doing all these things to build their company up even stronger, you know, when the market's in a pullback. So many of the reasons I think that Alibaba is still so bullish is, like I said, their ability to invest into a pullback, and they're in the Chinese market. So I'm going to link up some headlines here. I'll have all 3 of these articles linked down in my description box. But Alibaba keeps continuing to build their already massive business, you know, walking into a small Chinese recession, a 1-year low. And so, like with their cloud, for example, their cloud is growing at 103% year-over-year growth, which is amazing. Because I want to say back when they IPO'd in 2014, I think I remember hearing something that their cloud computing division was growing about 16 to 17% year-over-year. So just look how much that has improved in 4 years, you know, that they're now at reaching about 103% growth year-over-year. And another big piece of news that came out too recently was that they announced a partnership with Starbucks. And Starbucks has been trading sideways for about 1.5 years now, and they really need some help. Meanwhile, Alibaba has doubled, almost tripled its market cap. So this is really, I think, another win for Alibaba. Starbucks is going to use their platform to increase sales and get more sales pushed out, but Alibaba is going to benefit from every single transaction that's made. So it's another way of utilizing Alibaba's platform, making a lot more money. And then, you know, fundamentally, guys, Alibaba is still rock solid, and as a matter of fact, they've actually improved in a lot of their metrics. So one right here, two I know they've improved in is their forward PE is a 22, which is super low for a huge growth company like this. The trailing PO is 46, so that's actually an improved metric that I have found. And then down here at the bottom in the balance sheet, this is another thing I've spotted right here where they've grown a lot stronger, is that they had carrying almost $32 billion of total cash and only $19 billion of debt. So very, very strong company with cash, and this is what gives them the ability to make acquisitions and buy up smaller companies and things like that, and have partnerships during a big economic pullback in China. So guys, I just want to reiterate my point from earlier about the Hang Seng index, okay? And so it's very, very critical that, you know, the most important part, the big takeaway I want you to take from this video, guys, is to make sure you're tracking Alibaba stock with the Hang Seng index, with the Chinese stock market performance, okay? And make sure you are tracking those together and use that as a guide, really, to know when to buy into Alibaba and know when to sell off if you decide to make a trade on it. But I still think this company is great, and as it, like right now at $170, you know, if I had 10,000 bucks that I was going to invest in Alibaba, I would drop $5,000 right now at the current price level it is in the 170s, and then if it pulls back 10 or 20%, I would hit it with 1,500 or 2,000 more. I'd keep money always on the sidelines to keep buying more as the price drops, if it continues to drop. Now, the Chinese market, like I said, it can reverse really quick. I know they're going back for more trade talks soon, so that might be a catalyst to really get the Chinese market going back in a real bullish direction. And if that's the case, Alibaba is going to take off. So I just want to reiterate my my strong buy rating, and I think if the Chinese market stays healthy and turns around and goes in the right direction, I don't see Alibaba being under $250 very long. So I'm giving it a $250 one-year price target. Guys, I hope you enjoyed this video. Hit that subscribe button for more content like this. Make sure to like and leave me a comment, and I'll get back to you as soon as I can. Thanks, and have a great day.